Welcome to No Se Habla Taxes. I'm Melissa Armstrong, CPA and fractional controller at Steady Hand Accounting. This podcast is for creative agency owners who want to understand the financial side of their business without drowning in spreadsheets. Short episodes, real talk, no finance speak. Let's dive in. I want to tell you about a financial assessment I did for a branding agency. Mid-sized team, 12 people, solid revenue. The kind of business that looks healthy from the outside. We pulled their transactions, started going through recurring charges, and what we found was a lot. 3 different project management tools, active subscriptions, all 3. When I asked which one the team actually used, the answer was, it depends on who you ask. 2 video conferencing platforms, one that the company paid for, one that a senior account manager had signed up for separately because she didn't like the other one. Both of them billed monthly. Neither person knew the other one existed. A file storage platform that nobody on the current team recognized. We traced it back to a contractor who had left 18 months earlier. The subscription was still running on a company card, auto-renewing quietly every single month. And then there were the client project tools. Software subscriptions that somebody had set up for a specific engagement. The engagement ended. The client moved on, and nobody canceled the tool. It just kept going. Because canceling things takes intention, and intention requires someone to be paying attention. By the time we got to the bottom of the list, we were looking at roughly $1,400 a month in software subscriptions. $1,400. That is almost $17,000 a year in tools, some of which were duplicates of each other, some of which supported work they no longer did, and some of which belonged to people who didn't work there anymore. Nobody had done anything wrong. Nobody was being careless on purpose. This is just what happens when a team grows and nobody owns the stack. And also nobody looks at the financials. This is SaaS Sprawl. And I want to explain how it happens because it doesn't happen all at once. SaaS stands for Software as a Service, the subscription model that basically every software company runs on now. You pay monthly or annually, and unless you actively cancel, they keep charging you indefinitely. That's the whole business model. They are counting on your inertia, and they are usually right too. In a solo founder business, this is annoying. In a team environment, it adds up really quick. And here it's how it actually happens in agencies. Someone on your team needs a tool for a project. They found one, has a free trial. They put it on the company card. The trial ends, the subscription starts. They mention it to no one because it's $22 a month and it doesn't feel worth mentioning. And really, $22, that's peanuts, right? Meanwhile, somebody else on the team needed the same kind of tool 6 months ago. Found a different one, same process, also didn't mention it. Now you're paying for 2 tools that do the exact same thing. And because both people are used to the tool they chose, neither one wants to switch, and nobody has the authority to make a decision. So both subscriptions just continue. And then someone leaves. Their login goes with them, but the subscription does not. Then you take on a client project that requires a specific platform. You sign up. The project ends. The platform does not know this. It keeps billing you. You've already moved on to the next thing, so nobody looks back. Stack all of that up over 2 or 3 years of growth, multiply by a 12-person team, and you get a transaction history that looks like a scavenger hunt. And the mechanism that makes all of this invisible is autopay. Every one of these charges hits automatically. No invoice, no reminder. No one has to click anything to keep the money flowing out. And that is by design. It is a very good business model for the software companies. It's just a very bad outcome for your profit margin. So now let me pull some real math on this. $1,400 a month is $16,800 a year. That is not a rounding error. That is not a minor inefficiency. That is a significant chunk of your profit that evaporated into tools, and nobody noticed it because it came out in $30 increments across 50 line items. And I want to be clear, this is not an extreme case. This is a pretty average finding for an agency that has grown without building any systems around software purchasing. I've seen it lower, I've seen it higher. The pattern I see consistently is this. The bigger the team, the worse the problem. Because more people means more autonomous purchasing decisions, more personal preferences, more projects that come and go, and more former employees leaving subscriptions behind. There's also a specific trap with annual plans. You pay up front for a year of something in January, you use it for 2 months, and then it auto renews the following year. And you don't notice because the charge only hits you once a year, and by the time it comes around again, you've completely forgotten you have it. Annual plans are especially good at hiding because they don't show up in your monthly recurring view. You have to be looking at the full year to catch them. The other pattern worth naming, the former employee problem, is real and it is underestimated. When someone leaves your team, you probably think about their email, their access to your systems, the client relationships. You probably do not think about every SaaS tool they signed up for on the company card. But those subscriptions do not offboard themselves. They just keep running until somebody goes looking. This in particular is not a technology problem. This is an ownership problem. Nobody knows the stack, so the stack grows on its own and the company pays for it. But as always, I have something that you can actually do about this. Step 1, do the audit. Pull every recurring transaction from the last 12 months, not 3 months, 12. You need to catch the annual renewals, go through your bank account and every business credit card. If different team members have cards, you need to go through all of them. Make a list of every subscription, what it is, what it costs, who signed up for it, and whether it's actively being used. If you don't know who signed up for it, that is useful information. It means that nobody owns it. Step 2, assign ownership. Every tool on that list needs a human being attached to it. Someone whose job it is to know whether that tool is still needed. If you can identify a current employee whose work depends on it, that's your answer. Cancel it. This also applies to tools that are being duplicated. If 2 people are paying for 2 platforms that do the exact same thing, someone needs to make a decision, and that decision should not be indefinitely deferred because nobody wants to have the conversation. The subscription doesn't care about your team dynamics. It will keep billing you either way. Step 3, set up a purchasing process. Going forward, one person approves new software subscriptions. Not because you don't trust your team, but because no single person on your team has visibility into every single thing that you're already paying for. Without that visibility, every purchasing decision is made in isolation, and isolated decisions are how you end up where this agency was. The person who approves the new tools should also maintain a running list of what is active. A simple spreadsheet will work. Just include the tool name, the cost, the owner, the renewal date. It doesn't need to be more complicated than that. Step 4, build an offboarding checklist. When someone leaves your team, subscriptions should be part of the exit process. What did they sign up for? What did they have access to? Cancel or transfer everything before their last day and not 6 months later when somebody noticed a charge coming from an email address that no longer exists. And set up transaction alerts on your accounts. Most business banking platforms let you flag recurring charges over a threshold. Use them. You want to know when money is leaving, not discover it at year end. None of this is complicated. All of it requires somebody to own it. And that's the whole point. If you want help doing this kind of review for your agency, that is exactly what my No Se Habla Confusion assessment is. We look at your books, your systems, and your operations together. And then I tell you what I see and give you a roadmap. It's $500. If you're interested, email me at info@steadyhandaccounting.com. Subject line, No Se Habla Confusion. And go pull your recurring charges, all of them, including the ones on cards your team members hold. There's something on there you forgot about. I can almost guarantee it. I'll see you next time. And remember, no se habla taxes.